We saw some interesting things on Friday last week, May 30th, on um, kind of a breakdown on um, support, right? What we had been seeing is higher highs, higher lows on Bitcoin during its up channel, if you will, from mid-April, post the April 9th reversal on the Trump Liberation Day tariffs, right? Basically, that recovery from Bitcoin at about 75,000 all the way up to that new all-time high at 111,000 about a week ago. You saw a break below that support line, which I highlighted in orange, right? So this is totally normal behavior. Like you go on a run, 2 steps forward, 1 step back. The more of those you put together, overall, it just kind of defines that you're in a bull market over longer term time horizons, and that's exactly what we see with Bitcoin. Uh, right now on the short term cycle, but also like 4-year look backs on a halving cycle framework, or then even, much longer in terms of the 16 years that Bitcoin has existed. But if you see that crossover there, the break below is signaling that, hey, we potentially are going to see some softness in Bitcoin here for the, potentially coming days, maybe weeks, et cetera. Very short term. I found that interesting that on the exact same day, the break trend on that goods print, we saw very similar behavior from the complete mirror image asset, if you will, from Bitcoin as long duration treasuries, right? For high duration macro asset. So if you look at this is my favorite treasury bond, May 2050 1.25 coupon. It's the lowest coupon ever existed on the 30-year, or that's ever been issued on a 30-year U.S. Treasury. We saw something similar, right? A breakout against resistance on what's following a strong bear trend in complete opposite antithesis, if you will, to Bitcoin itself in long duration treasuries. So same scenario, except for different directions. Bitcoin price chart moving up and to the right on that short-term channel that I showed on the previous slide. Or if you zoom out, it's up and to the right, for 15, 16 years now. For U.S. Treasury debt, it's been a down and to the right scenario, a bearish trend for long-term treasuries. But my point here, what I wanted to highlight, it's literally to the day from Thursday, May 29th to Friday, May 30th, we saw a crossover against prior resistance or support like against primary trend for each of these respective asset classes. But in long-term treasuries specific case, there was a crossover of resistance, lower highs, lower lows, onto the other side of that prior trend. And that's basically what we've seen over the last, let's say, 2 sessions in U.S. Treasury trading, both Friday and Monday. I'd say, if you're looking for, a trend reversal, it looks pretty weak right now from treasuries, but this is a situation where, hey, treasuries, instead of that sell-off we saw throughout April, but really into May, where we hit a new low, it's just kind of what we're looking at. If you see a temporary pause, it could be days or weeks, right, is what I kind of measure this at right now, or expect, of just a let up and the upward pressure on what perceived risk assets, right, like Bitcoin or the Qs, the Mag 7s, or a few of them, if you will. Now, I'd be watching for that to pull back as treasuries, find themselves in some footing here. But I'm not, just given the weakness we've seen since April 2nd, right? I don't expect to see any massive bid coming to treasuries, right? So the bull case for treasuries would have to be that an actual recessionary scenario develops. There's a flight to quality to get that longer term interest rates on U.S. Treasury debt to really come in. I don't think that's my base case, but if it were to materialize, that would be the bullish case for treasuries. I think what's much more likely, if you look at this, so I didn't zoom out the chart full enough to get the 2 points, but if you see the dashed line in black, you can see where it connects to the most recent sell-off. That's your kind of your current support. If we break below that, we're going to be searching for a bid, right? It's just, open season. We don't know um, where the next level of support will ultimately come in for long-term treasury yields. So I think that's the key risk right now for treasuries. But we've already seen that you see in blue the upward sloping channel, very weak but positive, that U.S. Treasuries have traded within for basically most of 2024 into as far as middle of last May, where we finally broke below that. This is still a bearish setup, in my opinion. But that temporary kind of reversal, jumping across that resistance line says, all right, for the next maybe few days or potentially weeks, expect that volatility to slow down in Treasury land. But overall, the background context still looks pretty bearish. I'll just, I guess, say that.